In the world of electric vehicles, there's one name.
Tesla up 19% year to date.
Tesla's recent stock surge.
Tesla notching up another record today.
Tesla, of course.
And then there's everyone else. And one of Tesla's biggest customers right now? China. The country is quickly becoming the fastest growing purchaser of electric vehicles, or EVs, in the world.
Basically, nine-fold increase over the last 10 decades, and China already surpassed Japan and Europe, and has been the world's largest EV market so far.
China is a huge game changer. Some say that by 2030, about 40% of Tesla's sales will come from China.
But Tesla isn't the only EV company on the block. Far from it. As a result of that skyrocketing demand, there are now over 600 EV companies in China vying to compete with the electric car giant.
There are several startup companies who kind of seize the moment, and NIO is one of them.
帮我拍张照吧。
NIO, one of China's brightest EV companies, is on the tips of both consumers as well as investors' tongues. Over the course of 2020, NIO's stock price increased 1,000%, and investors threw around terms like the Chinese Tesla and the Tesla killer.
It has many names, but essentially it is one of the most promising and the most prominent electric vehicle companies that have come out of China in recent years.
But just 2 years ago, the company was nearly bankrupt. This is the story of how NIO came back from the brink of bankruptcy to become one of the hottest electric vehicle companies on the planet. To put NIO's importance into perspective, it's valued higher than American car manufacturing giant GM.
This company, which was worth about $4 billion by the end of 2019, is now a $94 billion behemoth, according to its valuation in the US markets.
In 2020, the company saw record demand for its model lineup, with year-over-year growth of 121%. And with the release of the ET7 sedan in early 2021, the stock immediately took another jump.
Very similar to Tesla in some extent is that the company has been focusing on really promoting itself as this digital or premium electric car manufacturer, but also trying to make it more appealing to the middle class consumers in China.
We are always very clear about our target user groups. For example, the price of our ET7 is similar to the ones of the best-selling mid-size or full-size sedans in China, like BMW's 5 Class, Audi A6, Mercedes-Benz E-Class.
NIO isn't a recent startup that came out of nowhere. Chinese EV startups started to pop up around 2014, the year NIO was founded, because of subsidies offered by the Chinese government.
European governments, China itself, they have all come out and said that they want to move into cleaner transportation solutions, which essentially at this point means electric vehicles.
China started to promote electric vehicles back in almost a decade ago. So at that time, it was only 1,000 electric vehicles sold annually.
Fast forward to 2018, and annual sales were easily eclipsing 1 million cars in China. And William Li, the founder of NIO, who's also no stranger to the auto market, saw that spike and decided to make the jump into the EV market.
Who himself is somewhat of a serial entrepreneur, somewhat like Elon Musk. The company he founded before this was BitAuto.
And it's a online-based service platform for vehicles in general. He's kind of a person with really deep knowledge in both the IT business but also the automotive industries.
But NIO wasn't always on a clear path to success. There's a reason EV stocks are so volatile. And it's because at any moment, companies are teetering on the edge of bankruptcy, and NIO was no exception.
It was a smallish, fairly new car company that faced these really major fire-related recalls early in the year, and then its sales were withering. And for that, there are many reasons. Its most formidable rival, which is Tesla, entered the Chinese market in 2019.
Alongside competition from Tesla, sales of electric cars plateaued in 2019, partly because of decisions taken by the Chinese government.
The Chinese government cut the direct purchase subsidies for electric vehicles by over 50% in 2019, which is the largest ever cut compared to previous years. So For some particular automakers, the subsidy cut really have a huge negative impact on them.
The company started bleeding money. It lost about $1.6 billion in 2019. The valuation kind of shows the picture here. The stock really tanked.
It's been a very rough few months for this company. They've had to deal with layoffs. They're trying to reduce its workforce by about 14%.
The troubles became so intense that the company came out and said that it might not have liquidity for even 12 months.
But in early 2020, NIO's fortunes changed. While China's subsidy cuts almost sank the company, an investment from a Chinese province saved it.
NIO managed to strike a deal with this Chinese city of Hefei.
In February 2020, they basically did this help NIO inject the cash flows and help them to deal with the cash flow issues.
As part of the deal, NIO agreed to establish headquarters in the city of Hefei's Economic and Technological Development Area, as well as provide investors a 24.1% stake in the company.
It also got credit facilities from local banks to the tune of almost $1.5 billion, and that kind of really let the liquidity concerns take a backstage, both for investors and also the company, to take its mind off the money game and kind of really focus on making those cars and delivering those cars.
Investors were confident that with liquidity problems taking a back seat, NIO could finally tackle the monumental task of scaling up the manufacturing of its vehicles. Unlike tech firms that could reach billions of customers through the internet, large car makers need to manufacture products at enormous scale and rely on huge supply chains.
Now, the traditional auto companies got this really pat down, but it has also got more than 100 years of experience behind it. So scaling up was a big problem for Tesla because, as Musk famously said, Tesla was not trying to invent the machine, which means the car, but actually the machine that makes the machine, which means Tesla or Musk were trying to reimagine the auto manufacturing process.
And manufacturing is what NIO is hoping will give them an edge. While their ES6 SUV costs more than a third more than that of Tesla's Model 3 sedan, NIO is using innovative features and services to bring their costs down.
The biggest thing that NIO is doing differently from Tesla is that it has outsourced its manufacturing to a state-owned company which has more experience in this matter.
Instead of building a factory of its own, like Tesla does with its gigafactories, NIO uses a contract manufacturer, the state-owned JAC Motors. Another big difference is NIO's subscription model that aims to simplify ownership by taking away the risks of owning the battery part of the vehicle.
And so what the customers would do is just buy this car or the car shell, so to speak, and rent the battery from NIO for a monthly fee.
So if you choose a subscription model, it actually reduces the price by around 10,000 RMB, which is like 20% or 15% of the upfront price for a new car.
The final difference between Tesla and NIO is how they both approach the problem of range anxiety, which is the term for how EV owners worry that their battery will run out before they reach their destination.
When your battery runs out, you have to park into a charging station and wait sometimes for hours until your battery is charged up enough for you to hit the road back, right? So what NIO is suggesting people do is make use of their battery swap services. So in this, a NIO car user would essentially drive into this swapping station, and in a matter of few minutes, NIO says about 3 minutes, their depleted battery could be taken out and replaced with a fully charged battery, and they just go back and hit the road.
While Tesla tried their own battery swap service in 2015, it was discontinued due to lack of interest. NIO is banking on the fact that a battery swap service back in 2015 was ahead of its time.
The market was just not mature enough. People were just not as comfortable with EVs at that point.
NIO says they're working on a second generation of swapping stations and plans to add 300 more of those stations around China in 2021. The Chinese EV market is set to surge to 1.8 million vehicles in 2021, and NIO plans to build 150,000 cars, quadrupling its output of 43,000 vehicles from 2020. However, NIO's competition is about to get much stiffer. They won't just be facing competition from Tesla and other Chinese EV manufacturers.
Global automakers are also doubling down on China's EV market, recognizing the growth potential of it. Volkswagen and Toyota, they all start to increase investments in EV technologies along with their Chinese joint venture partners.
And whether NIO can not only fend off competition in China, but carve out a path for itself around the world to become a household name remains to be seen.